Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 20th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Fed Day. Today we have our FOMC statement and rate decision. Later on at 1 o'clock p.m. Central, the market will be building out ahead of that announcement and news. Once that happens, 30 minutes later, we'll have the Fed press conference that follows, and again, this afternoon could have quite a bit more volatility in range. As of right now, inside day, very narrow range here to begin the day, just 42% of average range. If we drop this down to 1 day, we can quantify the current day, 42% of average range here, 17.5 points. As we head into the RTH Open, very narrow 3-day range overall, which is what we expected heading into Fed. It wasn't expecting a push too far one way or another. And even after a big breakdown early yesterday morning, prices were able to snap back to the range. So right here, sitting at 4,500, which is the exact same midpoint of the month right now. That is the mid of the month. Between that high and this high, exactly 4,500 right there. That's where we are. That's likely about where the new FOMC key level will be. And once we do, we'll print a new FOMC key level that looks like this. And the first move that happens away from that level could be a good move here. For example, if it sells off away from that level, we could come, find rejection, and snap back to the level in this manner. If it's a bullish reaction, we could run up here and then perhaps snap back to it this way down the road. So again, looking for that initial impulse move away from that FOMC key level. If we take a look here at the NQ, similar price action, narrow range. Even more narrow, 33% of average right now. You can see sitting right around the midpoint in the upper half of yesterday's range. Narrow 3-day range after Friday's sell-off that put it right back down. 15.4 even is the level right now. That level again could be about where we get our FOMC key level later on today. We'll see how the day develops here, but overall we're right at the center between two extremes. You know, we have 16 over here, you look down 15.4, then you look down a little bit more and you're about 14.8. That's your zones right now. And if we do make a move down, it could be down to this edge followed by a snapback. If it's to the upside, it could make a very positive move to the upside toward the previous year's high. Remember, the ES and NQ are both closing in on the previous year's highs. This buildup that we have of energy here could fuel that last move into that target. We're talking 600-point distributions right now. 16K down to 15.4, down to 14.8, plus 6, 16.6 here. So even if we were to come down here, it could be a rotation that ultimately leads us to 16.6 down the way. All right, let's take a look here at crude. Right now, crude down a bit, about 0.9% off the lows of the day. Big pullback here into the rising bullish Pima trigger zone. This is about as much of a pullback as we have seen this entire rally up. It's we really haven't even pushed below a previous session's low. The previous session here, we did push through the low. You can see kind of a sell here that developed now on this pullback. Watching to see how it reacts here. First time testing the bullish Pima trigger zone, rising bullish Pima trigger zone since the crossover here. That pullback could lead to a continuation higher into 94 up above. 94 is the next target up above. That's going to be the key range edge, not too far off of where we are right now. Very quick move to get to that level. As of right now, looking at the low of the session, not really finding a super strong low, but it is a decent reversal from those lows. A lower low failure with a decent reversal. You want to see 89.25 continue to hold on any pullbacks here, and you want to see that low remain intact. If we can find some higher lows off that low through 90, opens up a bit of upside up ahead. Let's take a look here at gold futures. Gold has been a bit bullish here lately. We've seen the move downward, and on this day was not able to get the previous low. Instead, bounced back above the rising 200-day moving average. You see a big push to the upside right now. Failed new low in an up move. A nice lower low failure on an intraday basis as well. And that could provide a bit more juice to the upside toward the previous month's close price. That's about 1968. So this market's still working toward 1968 up above. Keep in mind, this zone right here, especially the 950 area, that's basically kind of the middle of this larger range here. This has been about where prices like to stay. You can see here it gets a little bit higher into 1980, gets a little bit lower into 1920. Maybe we get beyond that, but really it's just kind of stayed above and below that zone, and at the moment we're kind of converging right to this point. So building some energy again. Once the Fed comes, you can see how flat this VWAP is. We may see a move that takes us either to the first standard back above. That would be 2,000. That's about as high as this market's getting, is one standard deviation above value. If we go to the one standard deviation below value, that'd be back toward the 1895s. Again, this market hasn't really sniffed prices below 1920, so we could be looking at a snapback to the upside here, but really it's anyone's ball game right now as we chop at the center of this compression. Lastly, looking at the YM. The YM here, tightly coiled, big time compression here. You can see the key range that is developing right here. This recent trap led us right back to the key range mid yesterday, and we're now here in the upper half of yesterday's range. Narrow range right now, 47% of average, as it awaits Fed later today. Upward sloping channel here developing. If it can hold this level, perhaps we can make another move. Again, for the most part, this key range is going to be very important. Once we really push through the top or through the mid here, it'll open up expansion opportunities up ahead. Given the trajectory of this market overall, you can see the very clear upward trending channel here that's developed throughout the course of the year. This compression here really lends itself really well for a big time upside move. Now the question is, do we get a big shakeout first? Do we get one quick shakeout that would help us define the low before rallying, or do we just get a big time transition phase up and push higher? So right now, all signs still kind of pointing to the upside until proven otherwise, with the previous year's highs coming into view here at the 36,850 zone. So again, we could be looking at more upside toward this target down the road. Do we need a shakeout first? We will see. Again, Fed comes out later on today, 1 o'clock p.m. Central Time. The market could be mostly coiling up, building up, range bound ahead of that announcement. All right, everyone, take care. I'll see you in the room.